Hey guys, just wanted to get into a topic that I think has been brought up in the community a little bit recently, and that is essentially how do we determine our directional bias based on the higher time frame, right? So what I'm going to present is something called expectational order flow. It's the idea that when you're in a sequence of higher highs and higher lows, that the expectation for price is to continue that sequence until ultimately the expectation fails. And once the expectation fails, the trend has essentially changed, which I'll go over in cable. But with that being said, I just kind of want to, um, I guess, help people position themselves a little bit better in the market and get a better understanding of what to expect in terms of structural highs and lows, and I guess kind of where an order block may or may not play out on the higher time frame. I think it's important to understand this higher time frame structure when you're trading on the lower time frames, so you can more or less understand if you're in a pullback or if you're in a pro trend bullish leg or bearish leg or whichever it is. So yeah, let's go ahead and dig into it. And then if you guys have any questions at all, obviously, just shoot me a message and we can talk about it either in the public channels or in direct messages, whatever you guys prefer. Yeah, hope everybody's having a good weekend, and thanks for Brad for this intro. And we will talk to you guys later. Thanks. I just wanted to go over a quick concept, something we call expectational order flow. It's essentially the idea that once you start to form structure, that there's an expectation for future price. So hopefully this can help some of our traders gauge a little bit better understanding and idea of what to expect when certain structure levels are broken. So let's dig into a little bit and yeah, see where we go. So, right, we have a bullish structure here, right? We have a series of higher highs and higher lows, right? We have breaks of structure to the upside, right? Now, the idea is that once you have formed a higher high, that there's an expectation. The expectation after a break of structure forming a higher high is that there will be a higher low. Now, once you have a higher high, what that does is it actually confirms your higher low, right? This higher low is not confirmed until the structure is broken to the upside, right? If price remains below this level, then your higher low is still the one from here, right? So this is the idea, this is the concept, right? So because price broke structure to this upside, it confirmed that this is a higher low or swing low. So the idea is that when price forms a higher low, it will not surpass this level. It will stay within the range. It might potentially come into it and then continue upwards. But the concept and the theory is that price will not close below this level. Now, expectations in my findings have been about 80% accurate, which means 80% of my expectations have played out. And when they have not played out, has resulted in a proper reversal of structure, right? We went from bullish to bearish. So with that being said, now if we look at most recent price action, we have a higher high that has just been formed, which then does what? Confirms that this is now the higher low. So the expectation is now price will form a higher low, whether it's to the mid-level of this range or potentially down all the way down to form a double bottom and form some liquidity here for future price to come and take out. Right? Either way, the expectation is price will not break that structure low. Price will give us a long opportunity within here to go long, right? And the expectation after our higher low is formed is what? A higher high for price to break structure to the upside, right? That is the idea. And yeah, right? So let's take a look at Aussie dollar as an example. This works on any pair. It's just expectational order flow, expectational structure, whatever you want to call it. And yeah, let's take a look. So if we look at the daily, we'll start back a little bit further just so we get a better idea. This is the weekly chart. What I'll show you here is how this plays out, right? So we have, let's just start from here. We have at this point, this is going to be our lower high, because we have a break of structure to this downside right here, right? So this confirms our lower high, right? Lower high, lower low. The expectation after the lower low is for a lower high, right? And that expectation is that price will not exceed our previous lower high. So then what happens, right? We get a lower low and a lower high. The lower low breaks structure down here. It forms a lower high and it fulfills our expectation that price will not break structure to the upside, right? And then we get a massive swing down, forming another lower low, right? Now the expectation for the lower high is tough to pinpoint, right? It's essentially a reversal, but you don't know when it's coming, right? So it's a lot harder to trade a counter trend pullback in this type of scenario, right? I'll go into a little bit, but essentially this is why I prefer continuation trades, right? Reversals are hard to pick. The main reason that they're difficult to pick is because there's only ever two, all right? If you think about it, right? So let me finish this sequence real quick. We'll get back into it, right? We have a lower low, and then we have our lower high, which exceeds our expectation that it did not break this structure high here, right? Once this is formed, we then have a lower low, right? And then we have a lower high because price does break structure here, right? So let's zoom in a little bit so you can see it better. But if we take a look, I'll just move this up, right? Price then breaks structure here to the downside, right? So this formed a lower low, which confirmed that this was indeed actually a double top with liquidity, but this is our new lower high, right? So once price broke structure to the upside, we then begin a new expectational order flow, right? Our expectational order flow now is bullish. Once we broke structure to the upside, our expectation is for a higher low, right? And that price will not break below the swing low. And what do we get? We get a higher low. And from there, our expectation is a higher high, right? Now let me get into what we have here. This is technically a complex pullback, right? Let's map it out real quick from wick to wick. Now, because price did all of this in here, but it never broke structure to the downside, and because it broke structure to the upside here and formed a lower high, the expectation remains. The expectation throughout this remains that we will get a higher high, right? So even though price came down to this level and it tapped into this weekly area of interest and it continued upward, the expectation remained because the expectation never failed, right? We were forming bullish price action. The expectation was for a higher high. So with that being said, you know, you can, obviously this is weekly, you can take trades within this. This is technically just a range. It's a complex pullback. But again, after a higher high is formed and then a lower high, the expectation is for the higher high, right? So one thing I want to get into before we get into current price action is that the idea of picking reversals, right? If we take a look at this, right, the only true reversals that you find are at the absolute apex of these levels. Everything else in between is continuation, right? So what does that mean? That means for every leg that you have, if you're trying to pick reversals, you need to be very, very accurate and precise. You need to know exactly what you're looking for, right? Because the chances of you actually picking the top or the bottom are a lot rarer than picking continuations, right? And if you can understand the order flow of price, understanding that you shouldn't get a break to the upside because you've been continuing to break lower lows and forming lower highs, the expectation is that price will continue to break lower lows, right? So once you've found yourself in your pullback leg and price is starting to weaken or show reversal signs or whatever it is that, however you want to enter the pricing, you should have a clear understanding of the overall higher time frame structure and have an expectation for price to complete your expectation. So that being said, picking reversals can be pretty difficult. You can do it, but it's difficult, and you're going to get a lot more opportunities in continuations rather than in reversals. So just wanted to touch on that a little bit and kind of set some expectations in that sense as well, right? So we have the general concept, I think, right? The idea of expectations and bullish trends, bearish trends, and what you should expect from price, right? Now, when you get complex pullbacks like this, where it just sits within a range, it can be confusing. It can toss you around, especially on a lower time frame. But you just have to remember what structure has brought you and kind of where you are in terms of the overall picture, right? And then you can set your expectations. And what I would do in something like this is I would essentially just look for the EQ of the entire range. And anytime price dipped into the lower end of the discount zone, is I would look for buy opportunities, understanding that price is going to make a higher high. And if my expectation failed, then so be it, That's just the way it works. But this should give you a pretty good, firm understanding of what you can expect from the market in terms of structure and in terms of where to get into price. So, right, so we'll look at current price action, right? We'll look at the weekly, and we'll go down to the daily and 4 hourly and 1 hourly on Aussie dollar here on current price action, right? We had this massive COVID sell-off, and we've had price rally up and kind of make up for lost price, lost currency, whatever you want to call it. Price has come up and it's corrected itself pretty well, right? So if we take a look and we just map out current pricing, we have, we'll just start from here, right? We have this higher high, and here we form a higher low, which then we break structure to the upside, which then forms a higher high. And because we have not broken this structure to the downside, we now can consider this our higher low. And now we have just recently, in the last 2 weeks, broken structure. Actually, just this week was the first time broken structure to the upside, right? So, with that being said, we have now broken structure to the upside, forming a higher high. Our next expectation is a higher low, right? So we'll look for something for that to fill out in the next coming weeks. That's our expectation. But the expectation overall is for a higher high, right? So we don't know when price will form the higher low, right? We're not going to try to pick the reversal. What we're going to do is we're going to try to look for continuations until price has given us a reason to trade short into our pullback, understanding that the weekly structure is bullish, if that makes sense, right? So this is weekly. So I'm gonna remove this stuff. Actually, I'll leave it for now. But let's look at the daily, right? We'll keep an eye on price, right? So, oops. Let's look at the yeah, that's 24. Right. Let's look at price, right? So as you can see, right, this is our weekly trend line, which I'm going to just change it to red or pink, apparently, just so we have a better idea of kind of what's going on the lower time frames, right? This is the daily, and we see the exact same things, right? So understanding that the weekly is bullish, we know that price within these levels is our bullish leg. This becomes our pullback, right? And then this becomes our main structure, expectational, higher high, bullish leg, right? Let me just change this. Right. So that being said, let's just break this down a little bit more, right? We'll just look at current week's price action, or current price action here in this bullish leg, right? So we have a break of structure to the upside, right? Continuing our higher time frame expectation for higher highs, right? We now have this, right? And we can take a look. It's not the cleanest on the daily, so we might just go to the 4 hour, because if we see here, most of this price action is pretty corrective, right? So let's go to the 4 hour and just get a better look, right? All right, guys, I just went through my entire video and realized that I was not recording. So I'm going to do this again. So here we are on the 4 hour. We've got a break of structure to the upside right here, which indicates that the bearish pullback on the weekly time frame is now over, right? So now we are getting back into our directional bias on the higher time frame, and our anticipation, or an expectation, excuse me, is for price to break structure to the upside, right? This is what the expectation is once we start breaking structure to the upside after we have formed our potential higher low, right? The higher low isn't confirmed until we break structure to the upside, so that's why it's the potential. It's not confirmed until this is broken up, right? So with that being said, let's take a look at how structure played out on the 4 hour to form the higher high, right? So we have our break of structure to the upside right here, which confirms this is the higher high. This becomes the higher low once structure is broken at this level here, right? So it breaks up. This becomes a higher high. This becomes the higher low. Now price begins to range through this level. It doesn't break any structure until here. But because price never broke this swing low level, excuse me, this swing low level, because this is the confirmed higher low, the expectation remains that price will break to the upside here. So price breaks to the upside, which then confirms this level as a higher low. This actually breaks way up here, right? And then we have our potential higher low, which is confirmed by this higher high. We have this higher low, which is confirmed by this higher high. And running out of space, right? And then we have this higher high, and then this higher low is formed by the confirmation of this higher high. And then our expectation is what? A higher high, or excuse me, a higher low, and then potentially a higher high. And that for that to continue until one of these swing levels are broken, right? Once the swing level is broken, then we can look for that bearish pullback on the higher time frame. But for now, we're going to continue to follow our bullish expectational order flow. Okay. Now, one of the things that I wanted to touch on was picking out reversals, right? Now, often we will map out an order block at the top of these levels, at the bottom of these levels, and we'll often see price just blow through the order block, and you try to figure out why. Now, two reasons really. One, it's either going to sweep liquidity and run the other direction. So it might run right through the order block, sweep liquidity, and then go back in the direction that you were thinking. Or two, you've got your structural mapping backwards. It's off, right? So if we just take a look at this, right? If you were to place, like let's take this for example, right? It's all hindsight stuff, but this is how we got to look at it, right? This is how we got to study the market so we can understand it, right? So we have this break of structure to the downside right here, right? So what does that mean? That means that this becomes an order block, right? Now, because we have this expectational order flow, right? We have a higher high here, and then we have a potential higher low here, right? In order for this expectation to fail, this needs to break the swing low, which is denoted by this level here, potentially even this, right? Because price broke this structure, right? This was our swing high. Price broke structure at this level, right? And then continued up. This was a pullback before this level. You could denote this as your swing low. This is the lowest point before the break of structure, right? So this is something that needs to be refined potentially, but again, it's a concept. But price comes nowhere near that, right? So price then on the lower time frame, probably the 15-minute, 1 hour break structure to the upside, right? And this 4 hour order block might be mapped out because we broke structure, right? But it's going to fail because the expectation is for price to form what? A higher high, right? And then we get it again, right? Price breaks structure to the downside. We have a 4 hour order block that is set here, which sweeps it and then sort of plays out. So it could have worked out. Again, this is the 4 hour. But ultimately, what does it do? It fails to break structure to the downside, so it's not bearish, it's still bullish. And our expectation is what? A higher high, right? I can't say the same thing here because it didn't break structure to the downside on the 4 hour anyway, but you know, there's imbalance and there's an order block here potentially on the 60. Nope. Sort of on the 15, I guess, but so, you know, on order block. So we'll just go back to the 4 hour, take a look, right? Right. But, you know, same thing here, right? If price fails to break this swing low, go to this for now. If price fails to break the swing low, my expectation is for price to make a higher low and then ultimately break this structure and form a higher high. Ooh. That's the expectation, right? So this order block for me, you have to be very, very cautious taking reversals from it. This could very well be the actual apex of this higher high leg because we have to remember on the weekly, it broke structure to the upside. So after a higher high, our expectation is for a bullish or a bearish pullback forming the higher low, ultimately forming the higher high, right? It could be here. It might not be, right? But all I know is that what I'm going to look for is I'm going to look for price to form a potential higher low, form this potential higher low and tap maybe into this this area down here, this order block here, and then go, right? Or form some kind of other structure in between here and then go. But again, the expectation is a higher low without breaking the structure and then forming a higher high, right? So with that being said, right, if we look at reversals and continuations just based on this, right, just based on the structure that we have here, clean this up a little bit. What have I done? Oh, okay. Sorry about that. If we look at structure here, right, the majority of the successful trades that you're going to take are going to be in the continuations, right? Because how many reversals do we ever get, right? 1, 2, right? 1, 2, right? It's the same thing. Your swing high, swing lows. Those are your true reversal points, right? The true reversal points, right? Everything else in between, it's continuation, right? There's going to be a lot more opportunities inside of your bullish, bearish legs than there are at the swing high, swing low pivot points. That's just the nature of it, right? So the most optimal place to look for order blocks and to look for your entries are going to be where these higher lows are formed, right? These are the levels that we want to look at for potential entries. Why? Because they're going to give you the best possible price and the best possible entry, because we know through this and through the data that we collect that price will continue to break structure to the upside. That's the entire concept. That's the entire theory. It works on all time frames, right? I'm just doing the higher time frame stuff because, again, it works on all time frames. I can go down to the 60 and show you the same concepts, but ultimately it doesn't really matter, right? You can do it on the 5 minute, you can do it on the 15 minute. It's going to be the same thing, right? Now, understanding this higher time frame expectational order flow, I'm hoping will help us kind of position ourselves better in the market, maybe help us eliminate some of these order blocks that don't play out, because now we know what to expect in terms of price, that we don't expect a reversal at every order block just because it is a 4-hour order block, if that makes sense, right? Because we know, again, from expectational order flow that it might not play out. Price more than likely will break through these levels and then reverse, forming bullish or bearish pullback structure based on, you know, whatever the higher time frame structure is if you're long or short, right? So, you know, with that being said, I'm going to close up here. It's getting late, but I just wanted to throw this out there and encourage you guys to kind of do your mapping like this. Now, for me, I don't normally do weekly. It's a bit much, but it is good to do, I suppose, if daily's hitting these levels. Like we just broke structure to the upside on the daily and the weekly, so that's pretty important. So it might be good to keep it. But keeping this structural mapping on the 4-hour is probably a good idea. So you can keep an eye on where you are in the market and hopefully not lose yourself as you look for positioning in the market, right? So this is generally what I'll do. And I'll map this out as a question mark because that's my expectation with the ultimate expectation of higher high, right? But again, you know, here's another one. In order to block that sort of break structure here, but the idea remains, right, that these levels can't always give the reaction that we want because the expectation is going to play out more often than not. All right, now let's take a look at GBP USD cable and take a look at the 4-hour structure and kind of what we've been looking at the last week or two here. Now, price has been pretty bullish. We've been making a pretty good, strong, bullish trend with higher highs and higher lows. Right, we'll start down here. We made a higher low, which is confirmed by this higher high, higher low. Price does not break this structure until this level, which confirms that the higher low is, I guess we could say this level here, which we'll get to in a second. Our pullback is then one of these levels here, right? No break of structure here, right? So that's our higher low, and then we get this higher high, and we get this equal low. It doesn't break structure; it's an equal low, and then it technically makes a lower high, and then it confirms our expectation for a higher high, right? Now, what we see here is we see a break of structure to the downside, which shifts our expectation, right? Our expectation now that we've broken structure to the downside, we've broken the swing low, is to switch bearish, which means we're looking for lower lows and lower highs, right? And we can see that play out here, right? We have this expectational lower high followed by what? Our expectation is for price not to break the swing high, but to actually break the swing low, which is exactly what we get, right? You can see it here, break of structure to the downside on the 4-hour. And again, if we look at the order blocks, or at least valid order blocks in the higher time frame, the ones that play out the most are the ones that coincide with the higher low, right? This is a sweep, but ultimately it plays out, right? And we can see if we were to map this one out, we would get a pretty good reaction for a potential short in this area, but ultimately price wanted to break structure to the upside, right? We can take this potentially as well, as it's probably broken 1-hour structure, right? We can see that this ultimately failed. We can take a look at this range here as well, and we can see that we got a 4-hour pricing bearish reversal in this bearish leg, which is ultimately a pullback on the higher time frame. It's a bit choppy, but it does play out, right? We can find ultimately as well that price respects the lower order block on this lower low here, forming the equal lows, right? Ultimately doing what? Breaking structure to the upside, right? Once we get a structure break to the downside, right, the expectational order flow switches, right? So that means what? That means that the order block on this lower level obviously failed, right? It was less likely to play out. At the time, we wouldn't have known that, but once we got this bearish close at this level, we then understand that the higher probability order block is going to be the one at the top that formed the higher low. Excuse me, the lower high. Right, so then we get this here, and ultimately price plays out with our expectation of a lower low, right? So, you know, I just wanted to point that out real quick. It's a nice piece of price action that fits the expectational order flow. And as we continue to look into the coming weeks, I will expect the same. I will expect price not to break this structure high, but to form a lower high and then continue this bearish structure, forming lower lows and lower highs, right? Now, when we do this, it does help to map these out. Our high, just so we are fully on board and fully mapped out, and we know exactly what we're looking for, right? It's easy to get lost in this stuff, especially if you're switching between time frames and pairs. So it does help to map this stuff out. and kind of set yourself up for success in this sense, right? Now, knowing that we're looking for a lower low based on our expectational order flow, and that price is now reacting off this 4-hour order block at the very top of this level, right? Our expectation is, again, that we will not break this structure high and that we will actually form a lower low, right? So once we start getting bearish price action here, we can expect a bearish leg to come and close below this level, forming the lower low, right? So we can take a look at the lower time frame, kind of understand what we're looking for, right? So we can look at the 60 real quick, or the 1 hour, and we get the same kind of structure flow, right? We get a higher high, which then shifts when we get a breakish structure to the downside, right? We get this, it doesn't break structure here, it breaks structure here, right? So then we get our pullback, we get our lower low, our lower high, lower low, lower high, and our lower low, right? Now I know I have that this is mapped out as our potential lower low, right? But we have to remember that this is just a rough drawing, and my expectation still remains that we'll get a lower high and then a lower low ultimately, right? As long as our expectation, or as long as price does not break the swing high, which is confirmed by this lower low, then my expectation is that price will continue to make a lower high and then continue in our bearish structure, right? That is the expectation. Now, if we look at the 4 hour again, right, we still have right, the 4 hour the 4 hour high, lower high, right? Which ultimately, if this is broken, this will change the entire structure of the mapping, right? So our expectation is for lower prices, right? And if on the 60, for instance, we start getting a break of structure to the upside, let's say, for instance, price does make this lower low, right? Lower high, lower low, and then ultimately breaks above this higher high, we know that we're expecting what? We have a bearish pullback, right? Or excuse, it's bullish, but ultimately it's a pullback on our bearish trend, right? And we're looking for ultimately continuations to the downside, right? So when we're taking a look at structure from this perspective, right, this should give us a clear idea that, you know, when price does break structure to the upside, we're simply in a higher time frame pullback. And ultimately what we should be understanding is that we're looking for shorts in the long term, and that our shorts will play out a little bit better than our pullbacks because it should have our expectational order flow theory behind it, essentially fueling price to generate a lower low. It's a little bit safer to trade. Yeah, so let's look at, right, so expectations for future price, lower high without breaking the structure, right, and then continue to the downside, right? If we look at let's look at the 15 minute, right, we can see it's all the same thing, right? You're going to get a series of higher highs, higher lows, higher lows, lower lows, right? Lower highs, lower lows. Sorry, this is confusing. Lower lows, lower highs, right? Ultimately respecting the order flow of things, right? So that's kind of where we're going to be looking for our entries, right? If we can see here, we have a 15-minute lower high being formed before ultimately creating a lower low, right? We can see here as well, once the lower low is formed, it then creates a lower high, which is then also mitigated. Not quite actually, it fills the imbalance more than anything, but the expectation is that price will continue to the downside. Now, one thing, again, that I like to do is I like to map out the EQ of these legs to see where the discount zone is for the price, right? So if price reaches into this area here, right? I'll look for the order block, the discount order block, for the best price possible for my shorts. Ultimately, price, as I think a lot of us have seen recently, is that it likes to fill in balance and sometimes does not tap the order block. But it's something to test and something to plan into your trading, right? Once we get a break of structure to the downside, we then form. Let's see, let me just clean this up real quick. Right. Once we get a structure break to the downside, we have our order block set at this level, which price does not come into, which is fine, right? And we can see a series of mitigations as we go down in price, right? We have a break of structure here, we have a mitigation here, we have a break of structure here, we have a mitigation here as well. Price then begins to just slowly trickle up. Now, this might be due to market timing. Generally, for me, I like to trade the London Kill Zone and London Open, as it provides the most volume and directional fuel, I guess, in my trading style, right? I like to see price commit early, and I like to see price just go. I don't like to deal with the London lull or the New York lull where there's not a lot of volume outside of the opening hours, right? So I'm going to look for trades within the London Kill Zone, London Open, right? That's just my preference. Now, let me clean this up again. Sorry. So we have break of structure. We have a mitigation. Break of structure. We have a mitigation, right? We don't see any breaks of structure until this level here, right? Now, because our expectation is for price not to break above the swing high, which is actually this level up here, right? We can say that our expectation is still for lower prices, right? We're still expecting a lower low. So as Asia came in, right, I think we all saw this one. A lot of us missed it. Some of us took it. We can look down here and see what our potential entry is, right? In this case, we have some equal highs that were formed that were swept ever so slightly. Equal highs. All right. We can see that price gave us a bit of a range, right? Gave us a bit of liquidity here on this trend line, right? That ultimately it faked people out, right? Generally, when you get a trend line like this, you're going to expect price to do what? You're going to expect price to break it, retest it, and then fall away. That's what traditional retail strategies tell you, right? However, because we know better than that, we understand that price swept the highs, right? Just barely. And once price sweeps the highs, the candle that sweeps the high is a higher probability institutional candle. It's a sponsored candle, right? So what do we get? We get a mitigation of this here, right? So the optimal entry would have been this. However, we did not get a true break of structure until this level here, right? So what we would do is we would essentially, if you want to be conservative, you would look for entry here, right? Break of structure, order block, relevant, prevalent here. You could do the last buy before the sell, get a little bit more behind it, right? And then you would essentially place your entry here. This is how you would have gotten in this trade. And give it 3 pips, be safe, cover this wick a little bit, right? And then, right, however you want to manage it, you can manage it. A lot of people like to choose liquidity for targeting. A lot of people like to trail their stop losses based on structure. A lot of people like to choose order blocks to target. Now, because we are, because we are in a series of lower lows and lower highs, right, and my expectational order flow is telling me that I should expect a lower low, right? With this type of momentum, I'm going to be targeting below the structural point of this low, right? Now, one thing when we're targeting structural liquidity to kind of keep in mind here is that each of these swing low levels from the previous price action become levels of liquidity, right? So what we'll see is when price sweeps it, right, and closes, we'll get our pullback, right? Price sweeps it, and we begin our pullback. More than likely, price will come back down, sweep this level, and begin our pullback, right? This is what I would expect. It's not set in stone, right? Price could essentially just drop off and not look at any of this stuff again. But ultimately, that's just kind of how it works. If we look at, let's look at the 60-minute, you can kind of see here, right? Let's open this up a little bit, right? We can see price ultimately sweeps the equal lows, retraces, and then it breaks this level here, right? And then it starts to retrace. Let's see if there's any other examples. Right, we can see here, price broke all these levels pretty hard and then retraced. But ultimately this was the one. We can see here as well, it broke this level and retraced before continuing up, fulfilling our expectation, right? Let's see. Right, we can see as well here, once price broke this structure, it retraced. Once price broke this structure, it retraced. Once price broke this structure, it did retrace. Same as this here. I guess it took out both of these, right? Here's kind of an example of where it didn't really do too much. I guess here we go, right? Broke this structure, retraced, right? Broke this structure, retraced. Yeah, it wicked it, but broke this structure, retraced a little bit. This blew right through it. Mostly blew right through this. It did pause here, but I think you get the point, right? Let's clean this up. Right, so we can expect the same, right? And these are good target areas for us, right? We can target the lows of these levels of previous price action, right? Again, right? Break a structure, retrace, break a structure, and we're beginning our retrace, right? We can expect something similar here, which means what? That once we do get the higher low, that when price forms a lower low and it breaks this structure to the left here, that we can begin to look for potential pullback, right? With the ultimate goal that price will not break this structure and it will continue creating a lower low, right? So that's one way I like to look at liquidity based on structure, swing points, based on previous price action. So ultimately, you know, this trade, we could have done just that. We could have just aimed simply for the low, you know, because price could have easily just made some equal lows and not swept it at all. So it's okay and safe to aim for this and then watch price action and potentially look for continuation as a downside, or take a large percentage off of your trade and allow a small percentage to run. Let's take a look again. We'll go back to the 1 minute just because that's our entry. Right, if we were to simply just target the low of that previous swing, that's 42R, you know, just based on this with 3 pip stop loss, you could have gone a little bit less. I'm sure there are scaling opportunities somewhere in here. We could probably look and find one, but I'm not going to do that. But yeah, so that's generally how we can manage it. Again, you can trail it on preferably 5-minute structure. It doesn't give you too much opportunity to do that. You get one opportunity here to trail stop loss. You get another one here, and then price ultimately breaks structure here, and you can trail this again, and then it starts to slow down. You can trail it as it continues to break structure. This might have been the last spot before you got taken out, right? For 49R, pretty solid. You got into the sweep of this structural low to the left, And and then price ultimately started to reverse. And if I say ultimately one more time, I need to do an ultimate counter, so I'm going to stop doing it. But yeah, that's there's a few ways to look at it. You could take partials at levels, right? You could take like 50% off at this level and let 50% ride, right? You could take another 50% off here and let the 50% of that remaining balance ride. However you want to do it, just make sure that you're paying yourself. Don't let these trades run against you. Be aggressive in a sense, unless you're planning on swinging and you don't expect price to come back above this level. With a pullback, I do potentially expect price to pull above these levels and sweep these liquidity levels, and then ultimately not passing this level, right? Because this is our lower high on the higher time frame. So I do expect price to continue our bearish movement somewhere in this area. So I think that should do it. Obviously, if you guys have any questions, just feel free to ask. I might have rambled a bit throughout this. I just want to make sure that it's clear, right? And that when you guys are trading with these expectations, that you can find yourself a little bit more in line with structure, and kind of have a better understanding of what to expect, when to take longs, when to take shorts, understanding when you're actually in a pullback or versus pro trend. I hope this helps. I hope it doesn't confuse anybody. If it does, just let me know, and obviously I'll be happy to answer any questions at all. And 2021 I think is going to be a massive year for everybody. Brad and Phantom have put together an amazing community. I'm so proud to be a part of it, and I really can't wait to see what's in store for everybody here. And I'll see you guys on Discord. All right, thanks.